Starting off with some breaking news. In fact, the Reserve Bank of India, we are getting to know, has imposed a moratorium on Yes Bank and capped withdrawals at 50,000 rupees for at least a month.
Weighed by bad debt and liquidity crisis, India's fifth largest private lender, Yes Bank, faced an unprecedented crisis when RBI introduced a moratorium and capped withdrawal limits to rupees 50,000 for an account holder in a month. So what led to the crisis at Yes Bank, and what does it mean for investors? After the initial moratorium and insecurity faced by depositors, the main question is, did Yes Bank's founder-promoter, Rana Kapoor's reckless lending lead to the crisis? Initial reports by investigative agencies do point fingers at Kapoor for lending to already debt-ridden corporates, in lieu of those corporates investing back in firms floated by his wife and daughters. In doing so, Kapoor flouted norms and rules of the bank he founded. The Enforcement Directorate has alleged that Kapoor's wife and 3 daughters floated 20 shell firms to receive kickbacks from corporates. What steps are being taken against the alleged guilty? Both the ED and the CBI are hot on Rana Kapoor's heels. Kapoor has been arrested and one of his daughters has been prevented from fleeing abroad. A case of money laundering has been filed and all the firms linked with the Kapoor family are being investigated. But unless and until the guilty are convicted and punished, greed will continue to ruin Indian businesses. Why did the crisis unfold despite the bank being under RBI's lens? The late Finance Minister Arun Jaitley had accused India's central bank of sleeping on the job when it allowed PSU banks to lend indiscriminately. The RBI would do well to explain why, despite the bank or its loan being under its lens, it could not prevent the crisis. For PMC and growing NPAs at state-run banks, the central bank could always blame the government for not being the sole authority to monitor those banks. But the RBI has full control over private banks, and it had even forced out its founder-promoter Rana Kapoor after it refused to give him extension as chairman. Still, it couldn't preempt the damage. What's the road ahead for depositors?
There is absolutely no need to worry or to be in panic. Your deposits are absolutely safe, and we are expecting very soon, maybe it could be as early as the end of the current week, where all these problems would be sorted out and the normal business would continue in the Yes Bank.
Depositors account for rupees 2.08 lakh crore with around 29 lakh accounts. The bank's administrators have hinted that the moratorium on withdrawal limit can be done away with sooner than March 31st. The cap on withdrawal limit has increased the insecurity among depositors and would have sent a wrong signal if the government had refused to intervene. Experts, though, have questioned government and RBI's draft plan of reviving Yes Bank with SBI picking up a minority stake, as they think it will be difficult to revive the bank. But given the domino effect that Yes Bank's failure would have had on the economy, the government had to come up with a plan to save the bank. How to prevent recurrence of Yes Bank-type crisis? Initial investigations at Yes Bank show that corporate governance is still a pipe dream in family-run enterprises. Rana Kapoor ran the bank as his personal fiefdom and the central bank was caught napping. The RBI needs to pull up its socks for more effective monitoring. If need be, rules need to be changed. Unless and until things improve, the pink papers would scream of scams and common people would have to run from pillar to post to get their money back.